Good morning, everybody. Hey, welcome to this Tuesday, the 16th of April, day after tax day. Hope you got yours filed okay. And hey, the markets are just struggling to stay in the green. We'll talk about that and more when Dave joins us here in just a few seconds. But let's not forget that in this world we live in, there are so many things that we have no control over. However, you can take control of your investment portfolio by knowing the amount of risk you have in that portfolio and making sure that it truly lines up with the amount of risk you should have in that portfolio based on how long you have to retirement. Give us a call at 863-382-0037 to schedule your core retirement design with that. We got Dave coming up next.
Light FM and Share and Morning Dave. Hi, I'm so glad you're here this morning. We're at 19 before 9, and it's time to check in on money and see what's happening to your IRA, your 401k. Even the money stuff in an old mattress cover probably is affected by this because, well, inflation. Downtown we go to the offices of Statler Financial Services where Phillip Statler's on the phone this morning. Good morning, Phillip. How are you?
Hey, I'm doing well today, Dave. I hope you are too, as we got through tax deadline day, and now we can focus a little bit more on what's happening in the markets.
No, we don't want to because they're El Stinko at the moment. The Dow is now booked its longest losing streak in 10 months. We started out all optimistic and smiley yesterday. We were in the green. At the end of the day, the Dow was down a total of 248 points. That was the winner of the three major indexes. That was 0.6%. Standard & Poor's was down a full 1.2%, down 62. NASDAQ was down almost 1.8%, down 290. And all of my tip sheets are saying we're just touchy about the situation in the Middle East, which is a legitimate powder keg. And Israel and Iran now threatening to start shooting major rockets at each other, which scares people even more, doesn't it?
It does, that uncertainty of what's going to happen over there, because it seems to be building more and more. And the more unrest over there, the more uncertainty that happens over here.
Yeah, absolutely. We didn't like it one little bit. We started out strong, like I said, through the day. We just pretty much drifted our way down. And that was in the face of some pretty good economic news that came out yesterday with the retail sales figure actually pretty much killing what we expected. I mean, they're up by a wide margin over what was expected. So now we start out this morning after an off day yesterday, and new home construction, we noticed it both come across our ticker just as we hit the microphone here. New home construction of new homes fell 14.7% during the month of March. I'm looking for what was expected in the mess. Oh, yeah, we were expecting about a 0.3%. No, it was building. We were expecting a 2.7% decrease. Nothing like beating the expectation to the downside by about 8-1, right?
Well, that's right. And Dave, that was the lowest reading we've seen since August, I think, of 2020.
Not good news, and probably reflected in the fact that bond yields are going up. The 30-year is up to what you said this morning?
4.75% for the 30-year Treasury, the highest it's been for a long, long time.
And the simple fact of the matter is mortgages and loans in general are kind of like retail. The banks get the money. They have to pay for it, and they mark up what they pay for it. So as the federal interest rate ticks up, that means your mortgage rate ticks up, and that means you don't start building homes because you're concerned about the mortgage payments.
Well, that's right. That's just going to add to it. And it's probably going to give more incentive to go to the adjustable rate mortgages, because they won't necessarily look at the 30-year Treasury. They'll look at something a little bit closer in. But Dave, that's not helping either, because those interest rates are still. I mean, the 12-month is at almost 5.2%. The 2 years at 4.93, almost 5%. So we're getting to the point that everything is getting really close to 5%.
Absolutely. It was kind of interesting 3 months ago when we did have an actual mortgage rate cut and things started dipping down. The refinance rate suddenly spiked back up against folks who took the 12-month adjustable rate mortgages saw an opportunity to refinance and fix it in at a little bit more reasonable rate. But now we're looking at the notion that even the ARMs are getting to the point where they're not that terribly far apart from the 30-year fixed rate. It's getting harder, and that's being shown in a major segment of the industry in the housing market. We're not starting homes again. We're not pulling building permits as fast as we normally do. And in a few months, that's going to cost us, and I assume, employment numbers.
I would assume so too, because the other thing that came out is the permits. I mean, they were down too. You mentioned that, but they were down significantly more than what was expected them to be down. So and what's really amazing to me right now, Dave, is I look at the futures and they don't care. I mean, they're just and maybe it's because they like the fact that the housing starts are going down, the permits are going down, because the Dow is up right now almost 3/4 of a point. So it's yeah, and it's up over what it was before 8:30.
Yeah, there is that syndrome that you and I talk about all the time. Good news is bad news, and bad news is good news when we're looking at the Federal Reserve and what their plans are. And about the last thing in the world we need is one more indication that the Federal Reserve, instead of not dropping rates, might even think about raising them. So, okay, a disappointment in the housing industry means that, well, okay, Jay Powell and his crew might look at the concept of adjusting anything upward as being a third rail they wouldn't touch in a million years.
Well, that's right. So it does help from that standpoint. We'll see what happens, because they should be meeting here pretty soon, right?
We shall consider. Yeah, I think the meeting is set for the 30th of April and the 1st of May. So we're coming up now we're at less than 2 weeks from the beginning of the next convocation. So things get touchier as we get closer, as well as new data comes out that's going to be fresh in their minds when they meet at the end of the month. Speaking of fresh data, it is still earnings season. We're still in the middle of the veritable flood of financials. And yesterday kind of pretty much stayed with the pattern that you and I saw on Friday, kind of batting 500. If they beat the street in terms of profit margin, their guidance ended up limiting the amount that they skyrocketed up. There were some good news elements, but by and large, I was getting about that same batting 500 mixed number out of the financials that reported yesterday. Bank of America was probably the marquee that came out that we'd all know about around here. How did they do last quarter?
So Bank of America had a really good quarter. They beat on both revenue and earnings. Earnings came in at 83 cents a share versus 76 cents. And they beat by almost $500 million in revenue. So that was good news for them, and that has them trading up today about 0.9%. As we keep with kind of the banking investment theme, Morgan Stanley also reported they came in at $2.02 a share versus $1.66 on $600 million more in revenue than was expected as well. They're really taking a big jump this morning, up 3.75%.
Cool. That doesn't sound like they had any conservative guidance to add as well, because that seemed to kill everybody that had good books on the prior quarter for the last couple of days of reports.
Yeah, that definitely is comes to mind when you see prices start to drop. Another big winner, probably the biggest winner I've seen so far this morning, is United Healthcare. United Healthcare had a good quarter. I mean, they're 9% in revenue growth over this time period, and so they came in at $6.91. They beat by 30 cents a share. Revenue was up as well, and they're trading up a little over 7.5% this morning.
Cool. Good for shareholders. Maybe nobody's getting sick. What do you think?
I don't know, man. I saw another article that said that non-emergency surgeries has increased in the older population, and that's helping Johnson & Johnson with their stock prices. Well, stock's fallen a little bit this morning, but it helped with their earnings and their revenue. They came in at $2.71 a share. A little bit better than the $2.64 that was expected. Revenue was just a tad below expectations, but they said their surgical units doing well. They're trading down about 0.75% this morning.
Time to get that tummy tuck, people. Elective surgery, right?
That's right. And hey, we didn't talk about this yet, but you said you talked about it a little bit yesterday. Tesla now
Yes.
basically saying laying off more than 10% of their global workforce. That's got them down another 2.3% this morning.
It probably won't help it. I got an update that just came across my ticker. Now they're saying that it might be as much as 20% of their staff.
Isn't that crazy? Man, that
So
tells
much
you
for
though.
high-flying companies. So much for
Well,
high-flying companies, right?
well, that's right. It tells you that EV sales are going what direction? Down.
Yeah, you and I have gotten into this so many times, and we're pretty much of one mind until they make one that'll let me climb in a car and drive 800 miles without a recharge. I'm not necessarily going to be a prime target for it. The other tidbit that comes out, Apple has reported that their iPhone sales were off by like 10% last quarter. Good chunk of that was because the Chinese market has been drying up on them. The Chinese government has been basically banning foreign-made cell phones in the workplace. And then their own, the Chinese government-owned companies that are putting out cell phones in China have been doing a better job. So consequently, the consumers over there have been buying more of them. Is it even possible that the biggest company in the nation could actually get in trouble with their one major product?
We've talked about that before, how they lean a lot on that iPhone sale, and it could start to see some weakening there, and could cause them some overall company issues.
It could very well. I mean, when you start seeing a 10% sales drop in a single quarter, it kind of makes you sit up and take notice. It should be noted, too, that even if you don't think you own Apple, if you got any mutual funds, almost all of them got some Apple in them at one place or another. Resetting the table, yesterday was basically a poop storm on Wall Street. It was largely international jitters because there wasn't any earth-shaking news on the financial front that drove us downward. 45 minutes before we open this morning, what are we looking at, Phillip?
Hey, we still got green ink, Dave. It is coming off the highs of the morning, though. We got the Dow up a little over $250. That's almost 0.7%. The S&P 500 is up 0.25%. That's about $12, and the Nasdaq 100 up not quite 0.2%, about $30. So everything and everything is starting to fall a little bit now as well, Dave. Commodity side of the coin, we got silver has dropped 1.1% back below 29 to $28.40 an ounce. Gold is actually trading up 0.33%. And crude oil down almost 0.6% to $84.94 a barrel. Dave, I will tell you, I saw gas this morning at $3.69 a gallon.
Excuse me.
Yeah.
I think the decrease, might be because Saudi Arabia actually said in public that they were supporting Israel in its tiff with Iran, and that might have made the petroleum markets just a little more certain that there was going to be a constant supply if at least two of the major Arab countries are actually on Israel's side in its tiff with Iran. So that actually, I'm not cheering for that conflagration, but the very least seeing them taking the side that we'd rather they take is a little bit better. Overseas markets tend toward being more susceptible to international concerns even than ours are, and it really shows up in them this morning. Asian Rim market just had an absolute sell-off before the 6 a.m. closing. I had losses over 2.25%, 2.68%, and whatnot. On average, the Asian Rim markets all were down by close to 2% at the close at 6 a.m. Europe not a whole heck of a lot happier. Virtually everybody's off. The overall European index down by a little over 1% now, halfway through their trading day. Doesn't look like it's going to be a good day as far as the overseas markets are concerned. Let's cross our fingers we can keep the U.S. markets in the green ink today. How do I find you, Phillip, to be able to stabilize my retirement fund? I'm looking at a lot of red ink here. If my retirement fund is dependent on the day-by-day, I probably made a dumb move in allocating things, didn't I?
Hey, it's very well could be. But that's why I developed the core retirement design to help folks design that retirement they always dreamed of. And part of that is knowing the risk in your portfolio. Give me a call at 863-382-0037 to schedule your core retirement design. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back here again tomorrow morning. Thank you so much, sir, and we'll see you then, all right?
All right, buddy. Take care.
Appreciate you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
And folks, again, I want to thank you for joining us today. Have a great rest of your day, and I look forward to speaking to you again tomorrow. Take care now.